Hi, I'm Rob Murphy, Head of Investment Companies at Edison Investment Research. Today, I'm delighted to be joined by Rod Wong, who is Founder and Chief Investment Officer of RTW. And today we're going to be talking about the RTW Biotech Opportunities Fund. Hi, Rod.
Hey, Rob. Thanks for having me.
Pleasure. So let's kick off. So RTW NAV outperformed the Russell 2000 Biotech Index and the NASDAQ Biotech Index in 2023. What were the main reasons for this?
Yeah, thanks for that pleasant question. We did beat our benchmarks last year pretty significantly. So just on the numbers, RTW Bio was up a little bit over 23%. That's versus our benchmarks. The Russell 2000 Biotech, which we like to use, was just over 10%. And then the larger cap heavy NASDAQ Biotech Index was up a little bit less than 4%. That last year's performance is actually pretty consistent with how we've done since our IPO about 4 years ago, where we're up now, life to date, a little bit over 80%. That's since, October 2019. And the Russell 2000 Biotech just under 5%, and the NASDAQ Biotech Index just under 30%. I think first at a very high level, big picture, we've taken a lot of care and effort to try to build a team of subspecialists. And then when we look for investments, we try to be very selective and we try to build a moderately concentrated portfolio so we can outperform. And as a result, I think we've become a kind of preferred partner for many of the more promising biotech companies out there. On the opposite end of the spectrum, just in terms of the specifics for the year, the biggest driver was Prometheus. That was over 12% of the return. That was acquired by Merck at a north of 70% premium. That company is the leader in kind of the most promising new target called TL1A, which is a therapy to treat inflammatory bowel disease. Our history with that company dates back about 3 years when we co-led their pre-IPO financing. And then the next biggest driver was Rocket Pharma. That delivered a little bit north of 8%. Our involvement there actually goes back even further to 2015. We were actually co-founders and we incubated the company. Today, we're super proud. That company is the second largest independent gene therapy company. And the big event for them last year was that they aligned with the FDA on basically what is a very efficient trial design to get that gene therapy to Danon disease patients. I think the result of that is hopefully the drug will get into the hands of these patients more quickly. And Danon patients really have extraordinarily high unmet need.
Great. No, that's a good explanation. And I suppose, you touched on acquisitions, and there's been a pickup. What do you think the outlook is for the biotech sector for this year, 2024?
Yeah, I'm pretty optimistic. I think the recovery that started the last 2 months of last year is going to continue over the course of this year. As you just mentioned, there's a very sharp reversal kind of late in the year. I think there are two major drivers. One, M&A, and then two, of course, the Fed's pivot on interest rates in December. My high level take is I think that was from an extremely oversold situation for the sector. We've been in a bear market that's almost 3 years long. And I think investors had basically gotten complacent and kind of forgotten about our space. I think the reality is that the new technologies, or what we call modalities, that hit the scene in the last bull market, they're now maturing. They've been delivering new drugs. In fact, last year, we saw the highest number of new drugs approved in history. And of those, nearly a quarter of them are based on some of these new modalities. So like gene therapy, RNA, cell therapy, and novel antibody technologies like bispecifics. So last year, pharma, their looming patent expirations made the year a record M&A year also. And I expect that to also continue this year because even though they made progress, there's still a lot of revenues that they're going to lose that they need to replace. And in fact, I think the dynamic this year could be quite interesting because since actually a third of what we call acquirable sector market cap, which is the companies that are less than 25 billion market cap. Nearly a third was bought last year. And so we think the remaining assets, you could see a bit of a feeding frenzy.
Yeah, that's interesting. So yeah, just less supply of good kind of good opportunities. I mean, actually, the M&A theme sort of continues, I guess, because you've also made an acquisition of Arix Bioscience. So what's the rationale behind that for you guys?
Yeah, no, that's a great question. So we are in process right now with that deal. The two companies announced the planned acquisition of Arix's assets on the 1st of November. From my perspective, we think it's a great deal for both sets of shareholders. Joined together, we had become the second largest listed biotech fund in the UK. That has obvious benefits, like it would improve our presence, hopefully our liquidity. It would remove some of the redundancy in terms of overhead for two individual funds. I think the portfolios are also complementary. Arix's assets are a little bit more early stage than RTW's. And then just purely from a short-term financial perspective, I think for Arix, the deal is far superior to an alternative like a wind-up. And then at the same time, for RTW, it would be immediately accretive.
Right. And so where are the timelines and the status now for this deal?
Yeah, it's getting close. So Arix shareholders, they have an upcoming vote on the 29th of this month to approve or not the deal. Assuming success, we're hopeful that the deal could close, roughly a month after that.
Right. Okay. And maybe if you go over the sort of reiterate your vision for RTW Biotech Opportunities, and how does that fit in with your other funds as well?
Yeah, that's a great question. So, when we think about RTW Bio, we think of it as really kind of an ideal structure for the way we approach investing, which is what we call full life cycle. It is one of our newest vehicles. We've been in business now roughly 15 years. I think the nice thing about the structure is it avoids the kind of misalignments that you often see if you're just a venture investor or just a public only investor. You have the flexibility to participate and to hold, whenever you see opportunity. In terms of shareholders for RTW Bio, they get exposure for everything we do across all of our vehicles. And it also, shareholders benefit from the firm's entire team, which is now roughly 75 people. And then, of course, all the access to the best ideas that comes with that. Bottom line is, even though it is not our largest fund, it's one of our smaller vehicles, it punches well above its weight. And on top of that, I think one of the unique aspects of the structure is that allows us to give it a higher weighting to our private investments. Strategically for our firm in terms of how it fits in, I think, RTW, it really is a key part of our effort to increase our presence in the UK life sciences ecosystem specifically, and to serve as kind of a key home base for our investments in broader Europe. We've invested in some wonderful companies based on UK science. Kind of the best example is Immunocore, which is actually now the world's leading TCR company. Bottom line is we want to do more of that, find those kinds of opportunities that we can support. We also hope to be able to contribute over time, to grow the local capital markets ecosystem. One of the dynamics in our space is that a lot of companies that start out in the UK and in Europe end up coming to the United States for growth capital. And we'd love to see actually more of the benefits of that innovation be retained locally. And we hope to contribute to that.
That's great. And I guess what's also interesting now for investors is, you're trading in a discount to your net asset value despite the sort of the strong performance. So I think there's plenty of opportunity for people to have a look at you guys.
No, we totally agree.
So that's great. Really, really great to speak with you today, and all the best with the Arix deal.
No, thanks a lot. Appreciate it.